Ever wondered why African immigrants don't invest in the stock market? In the next few minutes, I will break down the real reasons and show you how to turn those struggles into financial opportunities. Let's be honest, getting started with stock investments and African immigrant really does feel like mission impossible. You've got this big complicated world of stocks, taxes, and a whole lot of terminologies that feel like learning Mandarin overnight. But trust me, it's easier than you think. Today, we are breaking down everything in 3 simple sections. Number 1, bridging the knowledge gap. Understanding the basics of the stock market. Number 2, conquering the fear factor. How to overcome the fear of losing money. 3, you might want to stick around to the end of the video because this one is the absolute game changer. In these 3 sections, you will discover why many African immigrants like you and I struggle to invest in the stock market. More importantly, I will show you how I overcame these struggles and successfully built my first investment portfolio. But let me just put it out there, this video is just for educational purposes only and does not constitute financial advice. Always do your own research or consult with a licensed financial advisor. Alright, let's start with the elephant in the room, knowledge, or should I say the lack of it. As African immigrants, many of us grew up hearing, save your money, that's the path to financial success. But the truth is, saving alone won't build that generational wealth. Let me share my personal story with you. I grew up in the southeastern part of Nigeria, but I've been living in the UK for over 1 year now. Back home, the idea of investing in stocks wasn't something we ever talked about. It was about opening a business, working hard or saving money, and maybe investing in land or property, if you are lucky enough to afford it. But stocks? That felt like something only rich people or Wall Street bankers did. So when I moved to the UK, I started hearing more about the stock market, but honestly, it sounded so complicated. Terms like dividends, index funds, and portfolio diversification felt so intimidating. So I stayed away from it, thinking this wasn't just for me. But about 11 months ago, I decided it was time to stop letting fear and ignorance hold me back. I started researching, watching videos, reading articles, and learning everything I could about how the stock market works. And the more I learned, the less intimidating it became. So 3 months ago, I took the plunge and made my first investment. I started small, just £100 in an index fund, S&P 500 to be precise, which we will discuss later in my subsequent video. Let me be honest, the feeling of seeing my money grow, even though it's little, was amazing. But it wasn't just about the money, it was about realizing that I could take control of my financial future. Now when I look back, I can't be more proud of myself because I know taking that first step has been one of the best decisions I've made in my life. Quick question, have you ever invested in stocks before? If not, what's stopping you? Let me know in the comments. We often think we need to have a lot of money to get started, but trust me, I had same belief for years. Before I started investing in stocks, I believe investing was only for people with thousands of money sitting in their bank account, and my small £50 had nothing to offer to the stock market. But the more I learned about the stock market, the more I realized I didn't need a fortune to start. I just needed a little courage and consistency. And that courage and consistency was what propelled me to investing my first £100 into the stock market. For you, it might be 20, 30 or £50, but here is the thing, it's not about the money. Like I've said before, it's about starting the journey. The truth is, you don't need a financial degree to start investing. Do I look like somebody that have a finance degree? No, I don't. I've not even been in the 4 walls of a financial institution before. Okay, let's take a step back. What exactly is a stock, and why should you, an African immigrant, care so much about investing in it? Stocks or shares are unit ownership in a company. When a company needs funds to grow or expand, it can either take on debt or sell part of its ownership to the public. But this ownership is divided into tiny units called shares. When you own stocks, you benefit from the company's growth. As the company succeeds, its stock prices rises, giving you the chance to sell at a higher price. 2. Earn incomes through dividends. Some companies share part of their profit with shareholders as dividends. Imagine a company called Green Tech Limited wants to buy a solar farm but needs £10 million. It decides to sell 1 million shares to the public at £10 per share. If you buy 100 shares for £1,000, you own 0.01% of Green Tech. So if Green Tech becomes successful and its share price doubles to £20, your investment grows to £2,000. If it also pays a dividend of £1 per share annually, you will earn £1,000 each year just for holding the stocks. Isn't that mind-blowing? Robert T. Kiyosaki, the author of my favorite best-selling financial book, Rich Dad Poor Dad, said, "The rich don't work for money, they make their money work for them." So investing in dividend-paying stocks is a prime example of making your money work for you. So far, we've covered what stocks are, how it works, and some of its benefits. Let me tell you, there is a much bigger reason why you, an African immigrant in the UK, America or Canada, or anywhere in the world should care about investing in the stock market. And I'm saving it for the end of this video because it's something that could completely shift how you view your financial future. Stick around, you will thank yourself later. Number 2 reason why African immigrants don't invest in the stock market is the fear factor. What if I lose everything? One of the biggest reasons people, especially beginners, hesitate to invest in the stock market is the fear of losing their hard-earned money. In many African cultures, financial security is about preservation, working hard, saving money, and avoiding unnecessary risk. The idea of putting your money into stocks where prices fluctuate daily may feel reckless, and I'm sure you've heard stories about people that lost their money through investing in stocks. But here is the thing, we work tirelessly to create a stable foundation, but the thought of losing it all in a volatile market can feel overwhelming. But let's break it down and explore why this fear, while valid, shouldn't paralyze you from making smart investment decisions. But before we start, I want you to think about this. We all packed our entire lives into 2 suitcases, left our home countries for a foreign land full of uncertainties, and started all over again. If you haven't realized it yet, that was the biggest risk of all. Nobody wants to lose their hard-earned money, right? But here is where it gets tricky. Humans are often so focused on the fear of losing money that they forget there is also the possibility of making money. I mean, let's be real. Fear is something that we are all born with. Every single day we wake up, we are taking risk. Life itself is very risky because every decision we make comes from uncertainties. From crossing the road to starting a business, even seemingly small actions involve taking chances. Yet, we still move forward because the potential reward, growth, fulfillment, and progress outweighs the fear of failure. Helen Keller, the renowned American author and activist who became both blind and deaf at just 18 months old, said it best. Life is either a daring adventure or nothing at all. So, choosing not to take risks is actually risky because it often leads to missed opportunities, stagnations, and regret. The key is to prepare, educate yourself, and embrace uncertainties as part of the journey. Remember, the biggest risk of all is not taking any risk at all. By facing your fears, you are setting yourself on a path to financial freedom, one that can transform your life and create opportunities for generations to come. While the fear of losing everything is valid, it shouldn't stop you from investing. With proper education, diversification, and a long-term perspective, you can minimize risk and maximize reward. I know you might be asking, but Michael, how do I conquer my fears? The honest answer is, start small. Begin with any amount you are comfortable losing. It's crucial to ease into it with an amount that won't cause you financial stress if the market fluctuates. This approach allows you to build confidence and gain practical experience without the fear of losing significant savings. For beginners, starting with £50 to £100 per month is a manageable way to test the waters. Now, once you are comfortable, you can gradually increase your contributions. If you've made it this far, congratulations, you are among the 1% that will change their financial story this 2025. So, what do you think? Are you ready to start investing? Drop your thoughts or questions in the comment section. I would love to help you take that first step. So far, we have covered the knowledge gap and the fear factors. Now we are about to dive into the most important part that beginners often figure out when it's too late. The tax mess. Taxes can feel like a never-ending maze, especially for African immigrants in the UK, US, or Canada who are dipping their toes into the stock market for the first time. Terms like capital gains tax, dividends tax, and tax thresholds often sound more like a secret code. But let's be honest, who knew making money could come with so many rules? So if you want to keep your juicy returns and dodge those dreaded tax bills, mastering the tax game is absolutely essential. Alright, let's break it down. The big question is, why do taxes matter for investors? Here is the deal. When you invest in stocks, your money can grow in 2 ways. Number 1, dividends, the corporate world version of a thank you for believing in us payment. Number 2, capital gains. This is the sweet profit you make when you sell your shares for more than you paid for them. Sounds great, right? But here is the thing, both your gains will be taxed. So, while you are celebrating your profit, the taxman is already waiting to take his share. But here is the good news. You don't have to pay more than you should or even pay at all if you know the right strategies. In the next few minutes, I will show you exactly how I handled this myself to keep the taxman away from my hard-earned money. This is especially helpful if you're an African immigrant investing in stocks. Let's be honest, Most African immigrants in the UK, US or Canada don't fully understand the tax rules around investing. This lack of knowledge can cost you more money than necessary and might even make you miss out on valuable tax reliefs. Even worse, it could lead to penalties that hurt more than a bad investment decision. So now that we've laid that foundation, let's shift our focus to these tax-efficient investment strategies. I live in the UK. I've seen firsthand how taxes can quickly eat into your profit. For instance, if your investment grows and you make a nice profit, the government can take up to 20% capital gains tax. And don't get me started on dividends. Depending on how much you earn, you could lose anywhere from 8.75% to a staggering 39.35% to taxes. Even the interest on your savings isn't completely safe. Once you pass your personal savings allowance, HMRC is ready to take its cut. But what if I told you there are perfectly legal ways to grow your wealth without HMRC? Uncle Sam if you're in America or CRA if you live in Canada dipping their hands into your pocket. The first tax-free account that helps you keep HMRC away from your hard-earned money is the ISAs, Individual Savings Account if you're in the UK. So an ISA, Individual Savings Account, is like a VIP lounge for your money in the UK. Think of it as a special savings or investment account where any interest, profit or dividends you earn are completely tax-free. Yes, tax-free. Now imagine you're at a party and everyone is being asked to contribute for drinks, but someone hands you a golden ticket saying, relax, you don't have to pay a penny. That's exactly how an ISA works. It's your golden ticket to keep the taxman away from your savings and investment. When you save your money or invest through an ISA, any interest, profit or even dividends you receive are completely shaded from taxes. So while others are handing over chunks of their hard-earned gains to the taxman, you get to keep every bit of yours. For someone new in the UK, especially African immigrants trying to navigate the financial system, an ISA is one of the easiest ways to start building wealth without extra complications. And the best part is that it's 100% legal, it's simple to open, and there is no limit to what you can do with your tax-free returns. So now you are probably wondering, how does this magic work? Right now in the UK, the limit for an ISA is £20,000 per tax year. This means you can invest up to £20,000 into an ISA and not pay a penny in taxes or any profit, interest or dividends you earn. But wait, there is more. In my next video, I'm diving even deeper into these tax-free accounts, breaking down exactly how they work, the different types you can use, and how to make the most of that £20,000 limit. The alternative tax-free account in the US is what is called the IRA and the 401ks. The Roth IRA and the 401k are the tax-free or tax advantage MVPs. The difference between these accounts is simple. With a Roth IRA, you pay tax upfront, but your withdrawals in retirement are tax-free. A traditional 401k account differs your taxes until you withdraw, letting you invest more upfront. Either way, you are keeping more of your cash where it belongs, in your pocket. The Roth IRA allows your investment to grow tax-free, and when you are ready to withdraw in retirement, there is no tax on your earnings or qualified distribution. For my friends in Canada, say hello to the TFSA, Tax-Free Savings Account, and RRSP, Registered Retirement Savings Plan. The TFSA works like the UK's ISA. Any interest, dividends or capital gains you earn inside the account are completely tax-free. Just make sure you contribute up to your annual limit. The RRSP is more like the US 401k. You contribute pre-tax income and your investment grows tax deferred until you withdraw in retirement. Here is a bonus tip. You can even use your RRSP savings to buy your first home without penalties. These are mind-blowing accounts and I don't know why you are not making use of it. Once again, these tax-free accounts will be covered in depth in my upcoming video, so stay tuned. Robert T. Kiyosaki once said something that completely reshaped my life and my finances as a young boy living in Nigeria. It's not how much you make, but how much you keep, how hard it works for you, and how many generations you keep it for. This quote isn't just a financial mantra, it's a call to action. The real question is, what are you going to do today, not tomorrow, to make this quote your life and story? Now that you know this powerful secret, are you ready to take control of your wealth building journey? Don't let fear or confusion hold you back. Well, as the old saying goes, you can only take a horse to the stream, but you can't force it to drink. The choice is yours to act now. Let's turn this knowledge into action and start building the future you deserve. If you found this video helpful and want to dive even deeper into growing your money tax-free, stay tuned for my upcoming video. It's generally about how to save money tax-free using ISA's account. It's a complete beginner guide to keeping more of your hard-earned money exactly where it belongs, which is your pocket. Make sure you don't miss it.